Good morning, everybody. Hey, welcome to the day. It's Tuesday, May 19th, as we had a day yesterday. Huge upside to the market. And we'll see today, how will we follow through? That's the question. Folks, listen, we are here to serve our community. If you have any questions, concerns, hey, we're a 15-minute phone call. Call us, schedule a 15-minute phone consultation to see maybe if we can be of benefit to you, whether you have a 401k, you have IRAs, retirement accounts, whatever it may be. That's what we're here for. Give us a call at 863-382-0037. That's 863-382-0037. Hey, Dave is going to join us here in just the next click.
Oh, 0.7 Light FM. That'd be the human league there. Hey, good morning. It's 8:39 now. We're at 21 before 9. We always check in on money and see what's going on Wall Street this time every morning. Couple of pretty decent days on Wall Street for the last couple of days. Can we keep it going? Odds against it because the housing starts report came out this morning, and it ain't good news. Let's go down and talk about it to the offices of Statler Financial Services. Phillip Statler standing by. Well, it's almost Armageddon level numbers on housing starts, isn't it, Phillip?
Well, it is, but let's just let everybody know that it was a great day yesterday, right? We had huge upwards, and I know you'll give them the numbers a little later. They have to hang in for that. But
yeah, almost 4% up on the Dow yesterday. I mean, it was party time, so even absent bad economic news out of the government, a little profit-taking day today would be expected, wouldn't it?
Oh, absolutely. And so obviously we think there'll be a little red ink today, at least at the open. And we'll give those numbers at the end. But hey, you're right. Housing starts came out. And as you and I both would expect, they were off the mark from where they were last month. So the month of March, we had $1.2 million housing starts. So this month, the month of April, was down 30%, 891,000 housing starts. And that was less than what was expected. We expected 927,000 housing starts. So not only are we down from last month, but we're down even more than what analysts expected.
Yeah, that's a 30% drop in housing starts month to month. And I guess when you look at the actual numbers, you look at 900,000 homes being built during a pretty much 50-state lockdown. It could have been worse, right?
Well, yeah, absolutely. It could have been worse. But a lot of places, now not everywhere, but in our state, construction was deemed an essential business. In the Northeast, I'm not so sure it was deemed a essential business. So those people may have had to go home and sit around and collect unemployment and twiddle their thumbs for 8 weeks.
It was one of those things. The rules kind of varied state by state across the country, but in terms of just maintaining skeleton crews and whatnot, I wouldn't say I was expecting worse, but I guess when I look at the raw number, I'm almost relieved there was any activity whatsoever. Permits were down precipitously as well by 21%, but if there's a bright spot to be taken out of crummy economic news, that wasn't as bad as they were expecting, I gather.
No, it wasn't. You're right. Month over month, it was down 21%. That's never sounds good, right? But but compared to what we thought it was going to be, the analysts thought we'd have 996,000 annualized new permits. Well, it came in at 1.07 million. So that was better than expected, and we'll have to see if those permits turn into housing starts.
And when they do, it'll be at least a good bit of news, because somewhere down the line, a housing start number will be a pleasant surprise, we'll hope. And we'll take any bit of good news we can in rough economic times, because there's a bunch of guidance coming out from publicly traded stocks, not even reports. But we're kind of getting warned that some household names are going to kind of have a rough quarter or two ahead of them, like Southwest Airlines, I gather.
Well, yeah, Southwest, they made a filing with the U.S. Securities and Exchange Commission, and what they're saying is that they expect to see their May operating revenue down 85 to 90% from where it was a year ago, and June they expect operating revenue down 80 to 85%. They did say that they're seeing some modest improvement in passenger demand and bookings. Maybe not in the next 2 months, but down the road. I mean, I was brave enough. I got a meeting supposedly in California. We'll see if it comes to fruition, if California actually opens the doors and lets people come in.
That's an iffy proposition unto
That's right.
itself, isn't it? Yeah.
It is. And so, we're supposed to fly out the end of August for a meeting. And I booked my airline tickets the other day because they had some decent deals out there for Southwest. And so we'll have to see if we have to reschedule that because of the virus and different states having different operating procedures in terms of when they're going to open up.
Understood. I'm still flat-footed at the notion of any company saying that our business is down by 80 to 85%. I mean, think about that. That's Armageddon level for any business, small business, private business, or big publicly traded business.
Yeah, it's like, okay, you got to have a pile of cash sitting there to pay the bills if your revenue is down by that much.
And that's really an illustration of what kind of world that the small businesses that don't have that pile of cash around the corner from us are. And we're so glad to see some of them being open up at least partially because, hey, our mom and pop businesses around town don't exactly have a year worth of cash sitting around waiting to weather one of these storms.
Dave, some of them don't have a month's worth of cash to weather this storm and won't reopen. And that's the scary part, is that it has been devastating to the small business owner. And I don't know that it's going to rush back up and help those people. If they can't open, they're probably done.
And we're going to cross our fingers that the effect is minimal. We've already seen a couple that have said they aren't going to reopen, and we'll cross our fingers that's a minimal number that ends up happening at the very least. I mean, it sounds terrible when you start talking about acceptable mortality rates, whether you're talking about the disease or businesses not making it out of the shutdown, but there's no doubt it's a rough period of time. Have we got any other filings? We didn't have a chance to talk in depth about it, but SEC filings from other companies, they have to let the Securities and Exchange Commission know if they're going to have a monster surprise like that. Any other indications we've got? Any other sectors?
No, I really don't. I see a couple second offerings coming out. We talked a little bit about Moderna yesterday, the ones that's the company that's in phase 1 or going into phase 2 trials for a vaccine. They're offering 17.6 million shares of common stock at $76 a share. So taking advantage of their prestige right now. And then T-Mobile's coming out, and they are
offering. I'll be giggle.
Yeah, they're offering a second stock offering also to kind of reduce SoftBank's position in their company. So
understood. The other item that I had coming out is just a tidbit that I had to cross my ticker. One of the analysts expects when JCPenney comes out of their bankruptcy filing, they're going to end up having to close like 25% of their stores. So bunch of news releases we're going to be watching like a hawk around here, obviously.
That's right. Yep, absolutely. There little news about them combining and maybe joint venturing with Amazon. That's interesting. We'll have to see where that goes.
It's going to be
came out.
It's going to be interesting because it is time to start thinking outside the lines. I need something to smile about, and I'll bet a nickel that one of our reports this morning is going to be good news, like, maybe Walmart's quarterly report.
So Walmart did come in ahead of estimates by about 6 cents a share, and revenue was as well above the forecast. Same-store sales up 10%. That's a crazy number. They were expected to be up 7.2%, so a good deal there. So, but Walmart did withdraw their 2020 guidance though because of the virus, and they still have some uncertainty. They also announced that I don't know if you remember, but they had bought a company called Jet.com brand. And so they're going to discontinue that brand. And so that's going to bring a little uncertainty. I'm sure some write-offs within their company. So, but they're doing well today. They're up 3.5%, and they're bumping their nose up against their 52-week high right now.
It'll be interesting to see. I'm not surprised they pulled their guidance with the capacity restrictions on Walmart stores. Customer traffic down by definition. looks to me like the early indications is it didn't hurt them that much, but the next quarter's report from Walmart is going to be real interesting, isn't it?
It really will, because more and more retail's opening up. So what does that does that help other people, other retailers, and take away from Walmart? We
Understood.
had
Other
we had Home Depot, which we would think would be okay because it seemed to be busy every time I happened to pop in there. Obviously, they were limiting how many people could come in the store, but they missed on earnings. They were expected to earn $2.27 a share. They only earned $2.08 a share. Revenue and same-store sales beat the forecast. But again, bottom line, they say that difference between estimates and what actually happened in earnings was increased expenses related to the pandemic and stuff. Extra expenses they had to buy. They also suspended their full-year outlook. They're down almost 2% this morning.
I was going to bet they'd pull their outlook off of that housing starts number because they can't be good news for the home improvement companies like Home Depot.
Oh, exactly. They sell a lot of lumber to those guys. So Kohl's, the retailer, they reported they had a substantial loss. As a matter of fact, they lost $3.20 a share. They were only expected to lose $1.80 a share. So a pretty big miss on Kohl's front. They even declined, Dave, to give their same store sales comparable figure numbers. They took that out of the report altogether because of all the closings. They said it's just not, you're not comparing apples to apples. It's just not fair. So they're not reporting any of the same store sales figures. They did take some steps to improve their liquidity. They said at the end of the quarter, they ended up with $2 billion in cash, which I would think that would keep them running for a little while.
It gives them a little bit of a fudge factor. It occurs to me, as you mentioned it, with that big a miss, a lot of Kohl's stores are in malls that kind of got forced closures out of that, even though they might be qualified as essential to one extent or another. They had to close because their landlord closed them.
Well, exactly, and they're trading down about 0.6% this morning.
Okay.
The last one I have for you is Advanced Auto Parts.
I was wondering, they're at the top of my big winner list, and they had to have a report, didn't they?
They did, which is kind of interesting that they have these huge earnings, but they missed. They missed significantly. They only earned 91 cents a share for the first quarter. They were expected to earn $1.73 a share. So I think that's a pretty big miss on my schedule. Revenue was below the forecast also. Same store sales fell greater than expected. So I'm really perplexed as to why we're trading up 5.3% this morning, because I don't see anything in my tip sheet that gives me any indication that they'd be trading up today. But
that's kind of one of those makes no sense. But I also note that Southwest Airlines saying their business is down 80%. They're right on the top of my big winner list too, looking at 3% plus pre-market gains. Sometimes you just don't understand what the floor traders are thinking, do you?
Well, I think when it comes to Southwest, they're within $5 or $6 of their 52-week low. So I think it may be like bottom fishermen out there fishing the bottoms because they were up 13% yesterday.
It could be it. Resetting the table for the morning, you alluded to it was a big day on Wall Street yesterday. Dow was up by 912 points. That's 3.85%. NASDAQ was up by over 220, and the Standard & Poor's was up 90.2, which was 3.15% by any account. That's a barn burner of a day. Even without crappy economic news to start the day out, you'd expect a little profit taking today. 45 minutes before we open, what are we doing, Phillip?
Dave, we have a mixed bag this morning as we get ready to open, but it has improved after the housing numbers came out. It actually improved from where it was. So right now we got the Dow down less than 0.1%, $21. The S&P 500 is down a little less than 0.25%, $6.38. NASDAQ's bucking the trend. They're up 0.1%, up about $10. So that's where we are on the index side. Hey, on the commodity side, we are all green, though not by much in some fronts. We've got gold and silver both up about 0.7%. Crude oil is making some big moves today, Dave, up 1.1% to $32 a barrel.
I got some news out of the oil patch, too. Word is there's a bunch of hirings coming and callbacks coming back into the oil patch. Looking at the trend, I think they're figuring they might be able to reopen the West Texas oil fields again.
Now, that would be great news, Dave.
It really and truly would be. Overseas markets, Asia generally up overnight off of a bounce from our markets from yesterday. Europe is a little south of the zero line, but not by a lot this morning. Red ink, but not a ton of it midway through their day. Phillip, advice always needed as to how to insulate yourself from the weirdness on the market. Somebody misses by $2 a share. Their stock goes up by 8%. It doesn't have to make sense. Managing risk is where it's at. How do I figure out how to do that with a little help from you?
It is, Dave. Risk is the thing, right? Hey, folks, if you're not sure where you are, if you're not on the right track, give us a call. Schedule a 15-minute phone consultation or a Zoom meeting. Not a big deal. 863-382-0037. Check out our website, statlerfinancial.com. Join us on Facebook. Statler Financial Services. We repost our broadcast every morning with Dave. He gets a little repeat business there. And then every weekend, join us for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
On those rebroadcasts, the camera's not on me, is it?
No, but we'd love to find a way to do that.
Oh, no, I'm not wearing pants.
Hey, that's TMI, man, TMI.
Just like the guys on CBS. Phillip, thank you so much. We'll see you tomorrow, all right?
All right, man. You have a great day.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Guys, I really want to tell you, I appreciate you joining us today. I'm here if you need anything. If I can help you, your 401k, you're not sure if it's allocated properly, you got IRAs, any of those type of things you have questions about. Hey, we'd love to be your sounding board. Schedule a 15-minute phone consultation, a 15-minute Zoom meeting, 863-382-0037, or go to our website, statlerfinancial.com, and there's a pay link there you can click and schedule an appointment. Have a great day. I look forward to speaking to you again tomorrow.